And we are live. Welcome to another Market Outlook Live. I hope everybody is having a lovely morning. Today, the markets are green, but slightly green. We've had about 7 red days in a row, especially in the NASDAQ. The NASDAQ has been especially weak in the last few trading days. Are we actually going to finish positive on the day? Maybe. Maybe not. Right now, though, they are holding on to positive territory here. Right now, the ES, the S&P 500 futures, up 10 points, up 0.1%, barely in the green. The NQ is up 115 points. The NASDAQ up 0.37%. Again, kind of barely holding on to that green candle. And then the RTY futures, the Russell 2000, up 10 points, up 1/3% on the day. And if we pull up the volatility futures, because this will kind of tell us what the market is thinking today. The volatility futures, the VX futures here, down 19 cents, trading at $17.40. So volatility contracting as the market goes up. That is pretty standard operating procedure there. Yeah, in the chat, Eric says good morning. Good morning, Eric. Hope everybody in the chat is doing well. Yeah, for those that are hanging out in the chat, please give the stream a thumbs up. Help us grow in the algorithms. For those listening to the audio podcast on Apple or Spotify, give the show a 5-star rating. Help us grow on those platforms as well. All right. Yeah, you guys in the chat also, if you've got questions or comments about these markets, any questions about options trading, feel free to ask away. Yep, good morning, Speckle. Ian is in the chat as well. How's it going, Ian? All right. So we've taken a look at the index futures. So the markets are slightly higher today. Let's take a look at the other futures products. So if we sort by change percent to the downside, what is moving down in a big way today? Well, it's all about crude oil. The CL V6 contract is down $2.34. And that is a 2.75% down move in crude oil today. And that is obviously good for the market. The market wants lower crude oil prices. Lower crude oil prices is good for getting inflation under control, right? Nobody wants to see crude rise in a serious way. So right now, CL down $2.37 on the day. That is good for this market. Natty gas down 1.9% on the day. Natty gas trading at 2.781. Silver, my old nemesis. Silver is down on the day. Had a small red day yesterday, having a small red day today. Silver down 0.75%. Now, silver's been on a tear. Both gold and silver have been on a tear the last month. So a couple of down days here in silver, just a small little pullback. Not much going on really with my position. I didn't really need to make any adjustments. Down on the shares. Obviously on a red day. And then the options here, I've got a strangle on out in October, short put and a short call. Nothing really going on with that. Again, kind of a smallish move today. So I had no management needed on that particular silver position. Gold, we just mentioned, also down today. 0.2% down on the day. Gold has had a nice run alongside silver the last month. These things have been screaming higher. Taking a breather today, though. Other things moving to the downside, really not much. It's all energy and energy-related products and then precious metals. So what is moving higher? Well, we sort by change percent to the upside. Copper is the big winner here. Copper up about 0.9% on the day. The HGZ6 contract trading at 6.765. ZB is up 0.6% on the day. The 30-year bonds are at 22 ticks, trading at 109.21, which is kind of toward the upper end of their recent range in the last month or so. So that is also good for the market. The market wants to see the 30-year bond go higher, wants to see crude oil go lower. So, I mean, you would think this market would be doing a little better today, but there's some weakness in the tech sector that's kind of holding the market back a little bit today. The BTC futures, Bitcoin up 470 points. That's a 0.6% gain in Bitcoin, trading just under 80,000. Currently, BTC trading at 79,650. The Ethereum futures are up as well, up 0.2%. up 5 points, trading at 24.88. For those playing the agricultural futures, ZS, the soybean futures, are up small, up 0.25%. For those playing currencies, the currencies really aren't doing much today. The Aussie dollar is up 0.1%, basically a nothing move. Canadian dollar up less than 1.1%. The euro, basically unchanged. The British pound, basically unchanged. The Japanese yen, basically unchanged. Yeah, in the chat, Eric says, you touched on protective puts in one of your videos. What's a good product and duration to hedge against a big downturn? I don't know what you're talking about. It's a good product. I mean, whatever product you have a position in is what you need to put the hedge on in, right? Usually you're not trying to put a hedge on in a different product than the one that, like if you got a position, let's say you've got 100 shares of NVIDIA and NVIDIA reports earnings tomorrow after the bell and you wanted to protect that position. You just go buy some put below where NVIDIA is currently trading. And no matter what happens to NVIDIA, that put locks you in, to no more of a loss than that. You just turn it into a spread at that point. That's all a protective put is. So I hope that answers your question. And you can do that with options trades as well. Like if you had a short put in NVIDIA, say out in October, about 50 days, and you wanted to hedge for this week's earnings event, you could go buy a long put just for this week. The cheap long put because it's only got a few days of value, where your short put has much more value to it being way out in time. Or you could buy a put debit spread just for this week. Something really small and cheap as a small little hedge against your short put. There's a lot of things you can do. But yeah, you typically want to be in the same product. And if you're trying to hedge a position in ABC stock, then your hedge needs to be in ABC stock. All right, let's take a quick look at my positions here. Right now, the ES not moving much, only up 9 points. Because of that, I'm not going to have a lot to do on a day where the market is not moving much. This is a long put condor in the ES out at 87 days. So this is mainly a market hedge. So this is one of those, hey, if the market goes down in a significant way over the next 87 days, I've got this long put condor. It's basically a condor below the market. If I turn on the analysis mode for those unfamiliar with how a long condor looks versus an iron condor. A long condor is very similar to an iron condor, except you do it with either all puts or all calls. Typically, if I'm doing it below the market, I'm going to do it with puts. If I'm doing it above the market, I'm going to do it with calls. And if I'm doing it right at the money, I'm just going to turn it into an iron condor. And the reason is I want all the options to be out of the money. So right now, the ES trading up here around 77.50. And if it falls down, well, I'm in a different contract on this. Right now, this contract of the ES will be trading around 77.80. But if it falls into this trap area right here, into the condor in between the short strikes, I could make upwards of $1,100. Yeah, well, actually $1,175. So almost $1,200 on that trade. What did I pay for this trade? I paid 75 cents. Paid $75 for this, nice little hedge to the downside. Just because I really didn't have much downside exposure, I felt like I should add a bearish trade just to hedge my long bets a little bit. For those wondering how to form something like that, you go pick a time frame. I'm out at 87 days. I like putting about 90 days on this stuff. If you wanted something a little shorter dated, maybe you're just hedging for the next month, you can go, say, 35 days. And what I like is I like keeping these cheap. These are things that you're not going to win on very often, but I like going somewhere around the 1 standard deviation line here and buying a debit spread. We'll keep it 25 points wide here in ES. So if I buy the 17 delta put and go 25 points below, sell that one, and then go to the 2 standard deviation line, and let's do something similar here, except we need to do a credit spread. So I'll buy the 6 delta put and go up 25 points. I pay $175 for this spread, 175 times 50 in the ES futures, not times 100. The ES, the multiplier is 50. I'm not paying 175 or 180. I'm paying half of that. So if it's a 180 debit, I'm paying $90. So what's my max profit? Well, my max profit is 25-point wide spreads, which is really a $12.50 wide spread. My max profit would be $12.50 minus the debit, $90. I could profit around $11.60 is how this would work. And let me verify that by going to the curve and analysis again. Let me turn off my existing condor and show this example condor. Let's see if my math was actually correct on that as well. So yeah, I pay $87.50 for the chance to win $11.65. The market's moving around a little bit. So that is your long put condor below the market. If you wanted to create something above the market, you do the same thing. Use calls. Right, that way all your options are out of the money. You don't want short options that are deep in the money. So you wouldn't want to do this condor below the market with calls because you're going to have some very, very deep in the money calls. There's always risk of assignment. Not necessarily in ES. Well, it depends on the expiration you're in. But if you were doing this on a stock or ETF, you could face an early assignment situation by doing it with calls rather than puts. All right, yeah. Appreciate you guys in the chat hanging out. If you got questions or comments, feel free to get them in while I take a quick look at the rest of my portfolio here. In MCL, the micro crude oil futures, essentially I've got a call butterfly. It's a risk-free trade. I've already locked in a profit. I can't lose. Nothing to do here. I'm just holding that just in case oil goes up in a big way. I can make a little more money, but I'm not expecting to make any more than what I've already made on the trade. This here is MES, the micro ES futures. I've got a 5/2 put ratio spread. Put this on 4 days ago. Nothing to do there either. Market's moving up, but up small, and it's a newish trade. It's not going to get to my profit target anytime real soon. And the RTY futures, the Russell 2000 here, I've got an iron condor. Been on 4 days. We got 24 days left. Made about 14% profit. It's slowly working. Iron condor sometimes take a little time, right? I've only been in it 4 days. I probably need another 4, 5, 6 days to pass before this P&L starts improving. Obviously, on a shorter dated trade, the passage of time is going to speed up the value of these options decaying really fast. And as long as the Russell doesn't make a big move in either direction, just that passage of time is going to cause this thing to lose value, which is what you want on an iron condor, right? You sold the iron condor, so you want it to lose value. That way, when you buy it back for less, you profit. Apple, I've got an iron condor in that. Nothing to do here today. Apple down about $1.30. AMD up big, up $22. That's a 5% up move in AMD. I've got a put broken wing butterfly. And let me actually show you guys something, a trick some of you guys may or may not be aware of. But this is your put broken wing butterfly. If I turn on the analysis here. So I've got the 430 long put. I've got 2 of the 420 short puts. And then I've got a 400 put below that. So it's a $10 wide debit spread and a $20 wide credit spread. So one side's twice as big as the other. I broke the wing to force a credit on the trade, right? So this is your standard put broken wing butterfly. Now, if I go back into my positions here, what did I actually receive as a credit on the trade? $1.24. Max loss on the trade because of the $10 risk on the trade. $10 minus 124. My risk on the trade is $876 is the max loss. And that's if AMD crashes in a serious way. But here's the thing. I could probably turn this into a risk-free butterfly because it's showing a little bit of a profit here because of a big up day. And we'd have to go and check. But here's the thing. I made a 124 credit when I sold the spread here. If I go in here and I buy the 410 long put and sell the 400, basically the 410, 400 put debit spread, if I can pay less than 124, I will turn this into an equidistant put butterfly that is risk-free. And I can do that. I can, because 113 debit is less than the 124 credit I get. So I'm paying less than the credit I received. I've locked in a few cents of profit at that point. And what that will do is it will turn that butterfly into this risk profile. You see, can't lose now. I've locked in enough profit on the trade where above and below the spread, I basically make $11, nothing profit. But here's the thing, it now becomes a risk-free trade. I just let this go and see if AMD cooperates and crashes in a big way and gets inside this spread where I can make upwards of around $1,000, right? So that is how you turn a broken wing butterfly into a risk-free equidistant butterfly. You just need to make sure that that debit spread that you're purchasing to turn it into the equidistant wings, make sure you're paying a debit less than the credit you initially received on the trade. Hope that made sense to you guys. Yeah, and if it did, guys, hit that like button. Let's get that thumbs up working in this stream. All right, CoreWeave. What have I got going on in CoreWeave? A newish kind of trade. Sold a strangle a few days ago. I think, I rolled it once. So 1 day since the last roll, but I haven't been in this trade too long. Hasn't had a lot of time to work for me. Nothing to do there. FCX, a strangle, 2 puts versus 1 call. So I've got some positive deltas and we're having an up day. What I needed. Nothing to do there. Anything else I need to pay attention to? Hood is having a big up day. I probably do need to pay attention to this. Robinhood is up $5.58. That is a 5.4% jump in Robinhood. Robinhood's been on a tear. Got a little bit of a negative P&L. I've had to roll to defend this trade. The call side of this trade is the problem, or has been the problem, on the way up. Now, since the last roll, I have made some money on the put since I rolled it 4 days ago. The call hasn't gone anywhere. I'm tempted just to take the call off and let the put run by itself at this point. Especially the way crypto is running. Robinhood's very highly correlated with crypto. So, as long as Bitcoin keeps going to the moon, Robinhood's going to go with it. Yeah, I may just take the call off. I can always add the call back on if Robinhood decides to turn around, start going back down again. Right now, let's just roll with a short put by itself. Intel is up $1.23 on the day. I've got a strangle in it, a short put and a short call. The short put 16 deltas, short calls 15 deltas. Nothing to do here today. A fine position. Down a little bit since we opened it. Had to roll it twice to adjust the deltas, but we're fine on the position. Really don't need to make any other adjustments. Ooh, Pfizer. This really just happened the last few minutes, because earlier in the day when I was taking a look at my portfolio in the DT Options Discord with my Patreon members, I have a live voice chat each and every trading day with the members of my Patreon. We get together on Discord 15 minutes before market open. We start the live voice chat each and every trading day when I chat with those guys for about an hour. And this morning when we were doing our chat, this thing was not really up on the day. I think it was actually red on the day. But now a big turnaround, up 50 cents, up almost 2% on the day. These long calls out in January still have 143 days on them. I bought them 78 days ago, so it was a longer dated leaps trade. But these calls are starting to earn a little money here, right? I have the 27 strike and we're trading at 28.45, so I've got $145 of intrinsic value, right, in the money. I'm just going to let that continue to do its thing. Still so much time on that. We'll just let that go to next January, see what happens. Maybe I make a few $100s more on those calls. QQQ. Got 3 days left on this trade. This was a 7 DTE trade. This is one of our weekly campaign trades where we sell a 20 delta short put and then buy a put somewhere below to define our risk, turn it into a put credit spread. And we do these in any of the NASDAQ products. I use QQQ for this. I did a $10 wide put credit spread with the short strike being at 20 deltas. Yesterday was ugly for this trade because the Qs were down big. I was showing a nasty negative P&L. Today we're having an up day, so we're fine today. We've got 3 days left and I'm out of the money. I'm just going to let that go and see what happens. The rules on this trade is you put this on a Friday for the following Friday expiration, so it's a 7 DTE trade. For profit, you take 50% of max profit if you hit it. So take the trade off early if you get to 50% max profit. You also have a stop loss on this one. I typically don't use stop losses, but for this, the back test did you dramatically improve your return on capital by using a stop loss. I'm using a 300% stop loss. So if I got a 115 credit on this trade, if I'm ever showing 3 times that, which would be 345, if I'm showing a $345 loss, I'll close the trade early and take that loss rather than the max loss, which would be $8.85 on a $10 wide spread. Anything else? Silver down small, nothing to do here. XLF, I bought some calls the other day, 6 days ago, in the financial sector because I thought the banks and the financials would start running a little bit. It's doing okay. It hasn't really made me any money yet. Only been in it 6 days. I've got basically 3 months on the trade, so I've got time there. XSP, we've got some butterflies. Not much going on with these. Put butterflies, call butterflies, the put butterflies, broken wing butterflies. So they're fine on an up day. They make a little money. The call butterflies definitely like an up day. And this put butterfly here is an equidistant butterfly that started life as a broken wing butterfly, and I locked in the profit by buying that debit spread to turn it into the risk-free butterfly. So I've already locked in a profit, $76, nothing to do there. I'm just going to let this go and see if the market turns around in the next 3 days left on this trade. So this Friday, if we get a down move in the ES of around 150 points, I'll be somewhere near the center of this spread here in XSP. And I could potentially make upwards of $500 because of the $5 wide wings. All right, let's take a quick look at some of the stocks moving around today. What is moving this market? We sort by change percent. Really, I'm looking at one of my tech watch lists. We don't have much red in the tech sector today. Right now, Palantir is down $1.34, trading at $174.50. Amazon is down about 0.5%, down $1.40. Amazon trading at 260 and change. Google down about 0.5%, down $1.77, trading at 346 and change. And then that's it. Everything else in this particular watch list of mine, a lot of the stocks, the tech stocks I follow, everything else is higher. AMD, which I had a position in, we already took a look at, up now $23 on the day, more than 5% on the upside. Coinbase, very highly crypto related, obviously. Crypto was up. This is up another $5.57, up 3% on the day. SK Hynix is up $4. That is a 2.6% up move. Micron is up $22, up 2.4% on the day. ARM is up $5, up 2.1%. Netflix is up 1.8%. And if you haven't been following the chart of Netflix, I mean, take a look at the last couple of months in Netflix. This was the earnings event where it opened very low, right? Gap down on earnings, rallied nicely on that earnings day, didn't fill the gap, but has since more than filled the gap on the way back up. If it had a better IV rank and some better premiums, I wouldn't mind selling a put in this thing. Maybe going to October and selling, I don't know, the 24 Delta put as okay premium, I guess, 167 credit versus a 980 buying power. I don't hate the trade, right? I could certainly take that trade. Getting back into the tech stocks here, Oracle is up $2.50 on the day. That's about a 2% up move in Oracle. Oracle kind of been chopping around sideways in the last couple of weeks. SpaceX is up $2. SpaceX now trading around $137. This is another one that looked like, it found a bottom a couple of weeks ago. Had a nice bounce, now trading in this range. So this is one I wouldn't mind selling maybe a put credit spread or something. Naked puts don't quite work for me in SpaceX because, at least for my broker, TASTYTRADE, they really don't give you any buying power relief on naked puts. So you got to turn it into a spread just to make the trade work as far as capital efficiency. Yeah, Speckle, what are your thoughts on a strangle on Oracle? Well, let's take a quick look at Oracle. Oracle has an IV rank of 62. Now, you do have earnings coming up soon, September 8th. That's not a lot of time. That's only 2 weeks. So you could put on a strangle and see what happens in the next 2 weeks, and you may or may not want to hold it through earnings. Again, it'll depend on you, right? You decide that. So maybe, since you're not going to hold this very long anyway, maybe do the September cycle. It's only 24 days, but remember, you're probably going to do something before earnings anyway. So maybe put it on 24 days, let this go to maybe 14 days, let it run about 10 days, see what happens with it. If you get the right kind of market, you could be profitable in those 10 days. And if you're not, just get out of the trade ahead of earnings or roll it out to the next month. But in this case, if I sold the 13 Delta put, which is the 120 strike, you get a $2 credit. Buying power, 1200. It's really nice buying power, right? It's 1200. It's not high, and the credit's very juicy. The IVX is 75%. And if I go similar on the call side, let's go somewhere around 13, 15 Delta, somewhere about the 13 Delta, the 185. Get another $1.60, $1.65. Brings the whole credit up to 362. The buying power goes up slightly because the call has a little higher buying power than the put. So the buying power goes up to 1400 on a 362 credit. Yeah, I like the trade. And just let that go for a week or two. And then if you need to do something ahead of the earnings, just get out of the trade or roll it out right before earnings. Roll it out to October. You're going to get a massive credit for adding another month of time to the trade. Use some of that credit to also widen the strikes out, because you can get much wider out in October. But I'd start the trade probably in September, because again, if you get the right kind of market, that September strangle will profit much quicker than the October strangle. And if the trade doesn't cooperate, well, just roll it to October. So yeah, hope that made sense there, Speckle. Ooh, let me get a drink of water. I've been fighting a little bit of a cough and the sniffles. Mainly, I think it's just allergies. Been kind of dry and dusty here. Did some yard work a couple of days ago and been dealing with a little bit of the crud ever since. Right. All right, last chance for questions or comments from you guys in the chat. Go ahead and get them in. If you got anything before we jump off, as I pay attention a little bit to what the market is doing. The ES is up 12, the NQ up 145, the Russell up 9. Basically where they were when we started the stream 30 minutes ago. CL still down $2.50. ZB up 23 ticks, trading at 109.22. Yeah, mostly unchanged. Now, one thing to note about these boring markets, you get this a lot right before a big event, a big binary event, such as a big economic report. We saw this a couple of weeks ago with the CPI report. Right, the market was very boring Monday, Tuesday, Wednesday that week leading into the Wednesday report, or Wednesday afternoon conference call, especially with the, well, actually the CPI comes out in the morning. It's actually the FOMC meeting, that FOMC meeting that comes out in the afternoon. But you'll see that where the market just does nothing because they're afraid that economic report's going to move the market in a big way. Well, we don't really have a big economic report this week, but we do have NVIDIA reporting after the bell on Wednesday. NVIDIA is a $5 trillion company, or whatever the hell they're valued at. Biggest company in the U.S. markets. It's probably the most important gauge of the AI trade. Whatever NVIDIA does on earnings is going to move the market potentially in a big way, up or down. So a lot of traders are just sitting on the sidelines right now, right? Because, hey, if you know NVIDIA has the potential to really move the market, why are you going to put a whole lot of money at risk today on Tuesday or tomorrow on Wednesday, right? You're going to wait till they report Wednesday afternoon, then come back on Thursday and then start trading. And you get that a lot on these kinds of big events. So I think you're going to see low volume, low liquidity in the market right now, and just as people wait for the NVIDIA earnings event to happen before they jump back in. There is also a little bit of an economic, it's not really an economic report, but Fed Chair Warsh is going to hold a press conference on Friday. He's going to speak for, I think he's scheduled to speak for about 20 or 30 minutes. And whatever he says, especially about inflation, whatever he says about inflation and potentially raising the rates, the Fed rate, that could move the market in a serious way. I'm certain as he speaks, the market is going to fluctuate wildly up and down because that's just the way the market typically does during events like that. So pay attention to that on Friday. I believe his speech is scheduled for Friday morning after the market will already be open. So you will see that during trading hours. All right, guys, have fun trading. I'll be back tomorrow morning. Peace.